this module we shall study about the social accounting. The concept of social accounting originated in different forms by Adam Smith in 1776. Later on, Karl Marx and Engels also expressed their views about social cost in 1844. Karl Marx went to the extent of saying, under this free trade, the whole severity of the economic laws will fall upon the workers. Pigou in 1920 also elaborated the divergence of social and private cost. Economists like E. H. Chamberlain in 1945, John Robinson in 1960 expressed their concerns directly or indirectly about the social cost of an industrial organization. Social accounting is that branch of accounting which is concerned with the functioning of social system as a whole. It may be considered as the accounting for community. The areas covered by social accounting include pollution control, community relations, product quality, plant safety, equal employment opportunity, charitable contributions, employee benefits, and responsiveness to consumer complaints. The concept of social accounting is not an application of new set of accounting rules and procedures. In this field of accounting, the same basic principles of enterprise accounting are applied. Kohler defined social accounting as the application of double entry book keeping to socio-economic analysis. After reading this module, you would be able to understand the concept and meaning of social accounting. What's the objective of social accounting? Know how different approaches to be used of social accounting. What's the current status of social accounting in India and other countries? What's the today's problem of social accounting? Let us discuss about the difference between social accounting and conventional accounting. First, in conventional accounting, measurement of economic consequences in terms of money is the primary function, but social accounting seeks to determine important variables of social consequences in terms of socio-economic non-monetary effects along with economic consequences. Second, the function of social accounting is to measure and disclose the cost and benefits to society, whereas in case of conventional accounting, the main function is to measure and disclose the cost and benefits of a particular company. Third, social accounting is concerned with the development of measurement system to monitor social performance, but conventional accounting is concerned with development of measurement system to monitor economic performance of a company. Moving on to the need for social accounting. The practice of social accounting is followed only by a handful of enterprise in public sector. That there is greater need for social accounting in India for: first, the management fulfill its social obligations and inform its members, government and general public. Second, there are certain legal obligations that have to be fulfilled by the business, such as social security obligations and welfare measures, etc. The management reforms the public and governmental about its efforts in this regard through social accounting. Third, management gets a feedback on its efforts and policies aimed at welfare of the society. Fourth, social accounting is also necessary from the viewpoint of public interest group, social organization, investors and government bodies. Fifth, through social accounting, the company proves itself that it is not socially unethical in view of moral, cultural and environment degradation. We shall now study about the objectives of social accounting. First, effective utilization of natural resources. Main objectives of making social accounting are to determine whether company is properly utilizing their natural resources or not, to identify and measure net social contribution of an individual firm consisting of cost and benefits internalized to the firm and externalities affecting social system. Second, help to employees. Company can help employees by providing the facility of education to children of employees, providing transport free of cost, and also providing good working environment conditions. Third, help to society. To help determine whether individual firm strategies and practices which directly affect the relative resource and power status of individuals, social segments, generations consistent with widely shared social priorities on one hand and individual aspirations on the other hand. Because companies, factories spread the pollution in natural society, which is very harmful for society. So, enterprise can help to society by planting the trees, establishing new parks near factory area, and also opening new hospitals. Fourth, help to consumer. If a company provides goods to consumers at lower rate and with high quality, also benefits the society. To provide optimal information to all the constituents of the society to enable them to make decisions regarding allocation of the social resource where optimally implies cost benefit effective reporting strategy which also optimally balances potential information conflicts among the various constituents of a firm. Fifth, help to investor. Company can help to investor by providing transparent accounting information to investors. Firm strategies and practices that directly affect relative resource can be determined because of many objectives are related to safeguarding of natural resources. So, this accounting is also known as social and environmental accounting, corporate social reporting, corporate social responsibility reporting, non-financial reporting, sustainability accounting. Next, let us understand the approaches to corporate social accounting. Inventory approach. The business enterprise discloses all its social activities in purely descriptive form. An inventory listing has some informational value and operationally it will not be difficult to develop. But it has two major drawbacks. First, the list could be endless since in one way or the other most activities of an enterprise can be construed as being socially relevant. Second, comparison business firms would be extremely difficult because no standard can be used to measure the company's social awareness except on the basis of how well the company explained its social activities. Next, cost or outlay approach. In this approach, besides listing the socially relevant activities of an enterprise, the amount spent on each activity is also reported. Information of a quantitative but non-financial nature may also be presented. This approach, though appears to have much more merits than the inventory approach in the sense that it provides a means for making some comparisons between business enterprises, suffers from the limitations that high amount spent on social activities may not mean excellent benefits. Example, high expenditures on healthcare does not mean more benefits. Next, program management approach. According to this approach, first of all, an organization should determine its social objectives or programs, and then it should disclose its social activities, indicating the amount spent on each activity and whether the objectives of the program have been met. Cost benefit analysis approach. This approach advocates the preparation of accounting statements to depict the cost benefits of the social activities of an organization. Social benefits include those benefits provided by an entity for which it is compensated, as well as those external and economies for which no compensation or inadequate compensation is received. Social cost include any cost, sacrifice or detriment to society, whether economic or non-economic, internal or external. Next, preparation of separate schedule approach. Schedules representing employees' benefits and services, social overheads, township maintenance, etc. are prepared and shown as part of annexure in the annual general report. Employee benefits and services consist of salary and wages and various social security benefits. Social overhead schedule include medical, educational, canteen and transportation facilities, etc. Next, expanded value added approach. Building on traditional accounting principles, the expanded value added statement EVAS is an innovative tool to account for economic, social and environmental factors. It provides a way to account for traditionally non-monetized factors such as volunteer hours to provide a better picture of social value creation. Other approaches. Mention of social activities undertaken by an enterprise in chairman's speech, director's report or auditor's report. Moving further, let us now understand the social accounting at abroad. The concept of social accounting and reporting gained prominence and momentum as a result of high level of industrialization that has necessitated corporate sector investment substantial amount in social activities with the sole aim of nullifying the evil consequences of industrialization. Social accounting practices in various countries of the world are as follows. Germany. In Germany, the first attempt to put the social accounting ideas into practices was the Integrated Social Report of the Stage Company of the fiscal year 1981-82. Later on, Scarab Quicke AG also published a social report. These two social reports, which attempted to relate the company expenditures to specific social benefits, are the classic examples of social accounting in Germany. Despite the fact that the art of social accounting in Germany is still in embryonic stage, various institutions have desired to recommend to their members that they take an active interest in this development. Next, Netherlands. Corporate social accounting is rapidly becoming a normal business practice in Netherlands. These reports are primarily addressed to the employee's constituency and certain information on the personal policy of the firm. Before 1970, only a few corporations published their social reports. However, after 1970s, social accounting gained momentum. Now, majority of the organizations are indeed publishing social reports voluntarily. Next, United Kingdom. A large number of companies in Great Britain are publishing the social reports. This has been due to passing of the various statutory enactments. Besides various statutory enactments, the consumer protection movement, the ecology movement and egalitarian movement have exerted their pressure in altering the business views regarding social accounting. Next, Japan. The crux of Japanese management is unlike in the West. In Japan, the company is considered on the same level as one's own family. Once this model assumption is accepted, it explains a whole lot of practices followed by the Japanese such as lifetime employment. The labor management relations in Japan seem to be somewhat less adverse than in other countries. The Japanese companies do not pursue their human policies for altruistic reason because the nature of the Japanese society is such that they have to be socially accountable and cannot behave the other way all and expect to survive as the viable entities. Next, Australia. Australian companies have very enthusiastically stepped in the field of corporate social accounting, and these companies are disclosing such information concerning social responsibility to various areas. In Australia, social performance was considered under following major areas. First, community involvement. Second, environment. Third, human resources. Fourth, energy. Fifth, products. And sixth, consumer issues. In Australia, certain social responsibility disclosures have become mandatory when a corporation and securities industries bill was passed through the House of Representatives. Next, United States of America. During the last 30 years, the US Congress has enacted more than 100 significant laws regulating almost all bases of corporate activity. These include the Federal Hazardous Substance Labeling Act 1960, the Air Pollution Control Act 1962, the Occupation of Safety and Health Act 1972, etc. In addition, existing or new feudal government agencies created to administer this legislation have issued thousands of rules, procedural requirements and interpretations. Thus, we have seen as to how social accounting and reporting is assuming an important place in various countries. Next, France. The French companies used to publish social reports voluntarily before the enactment of the Act, which came into force in July 1977 when the recommendations of the Sous-de-Green Committee were accepted by the French Parliament. Therefore, since 12 July 1977, the voluntary approach in France on social accounting has been made compulsory by the said Act. The Act has been applied to the industrial, professional and civic bodies and unions, public offices and ministries, and the public sector firms having 75 or more employees roles. Let us now learn about social accounting in India. The Sachar Committee in its report in 1978 recognized the need for social disclosures. It has observed that the acceptance of the concept of social responsibility must be reflected in the information and disclosures that the company makes available for the benefit of the shareholders, creditors, workers and the community. It recommended that a provision may be made in the Companies Act that every company along with director's report shall also give a social report which will indicate and quantify in as precise and clear terms as possible activities relating to social responsibility which have been carried out by the company in the previous year. The Institute of Chartered Accountants of India (ICAI) also encourages companies for reporting their social performance in their annual reports, as it gives the award for the best presented annual reports every year, considering social accounting as one of the criteria. The amendments of 1988 to the Indian Companies Act require the disclosure of energy conservation and pollution control. A few attempts have, however, been made by some of the enlightened company managers of both the public and private companies to exhibit some information, descriptive as well as quantitative, regarding the social activities undertaken by them in their respective annual reports, particularly in public sector. The concept was relatively new for India and is yet to gain momentum. Tata Iron and Steel Company, TISCO, was the first in India which conducted social accounting with the sole aim to examine and report to what extent company has been able to fulfill its objectives regarding its social and local community. India may become the world's first country to make corporate social responsibility mandatory. Companies Bill 2013 is passed after endorsing all the propositions made by Parliamentary Standing Committee on Finance. Corporate Social Responsibility (CSR) will become mandatory for the first time in the world in any country. In August 2013, the Parliament has made CSR disclosure to be mandatory. The statements advocates that those companies with net worth above rupees 500 crore or an annual turnover of rupees 1000 crore shall earmark 2% of average net profits of the 3 years towards CSR. In the draft Companies Bill 2009, the CSR clause was voluntary, though it was mandatory for companies to disclose their CSR spending to shareholders. There is a growing realization among organizations that it is not merely sufficient to provide funds to support causes initiated by non-profits, and when employees volunteer for a cause, it's a win-win situation for both the organization and the employee, as it helps improving managerial skill and enhancing profit. Next, moving on to limitation of social accounting. First, not specified type of report including financial and non-financial. Second, not specified amount of presented information. How much information is enough? Third, not specified a clear criteria and indicators to compare the companies with each other. Fourth, lower quality of available reports and social reports because absence of law. Fifth, separation of social cost and economic cost. Sixth, disability of the providers of these reports to establish a relationship between social cost and benefits obtained from it. Let us now recapitulate what we have learned so far. Social accounting is that branch of accounting which is concerned with the functioning of social system as a whole. Social accounting is concerned with the development of measurement system to monitor social performance. The business enterprise discloses all its social activities in purely descriptive form. An inventory listing has some informational value and operationally it will not be difficult to develop, but it has two major drawbacks: cost or outlay approach. In this approach, besides listing the socially relevant activities of an enterprise, the amount spent on each activity is also reported.